is AJ Powers here with Powers Premier Real Estate. Today I am with a couple of our most important partners, Robin and Tracy of the Guthrow Story Home Loan team. You guys are with Caliber Home Loans.
Yes.
Yes.
And we've been working with you guys, seems like forever now. And as I mentioned, you guys are some of the most important partners that we have because so much of the real estate world revolves around financing these days. So I want to talk today about the importance of having a great partnership like we have with Caliber and you guys and our team at Powers Premier, and what it really means to have a preferred partner and how that benefits our clients. So what do you guys think are some of the biggest benefits as far as like our partnership to our clients, or what you guys are doing at Caliber as far as adding value and making sure things go smoothly for our clients?
I think that one of the biggest things is our ability to look at a deal and know immediately how we can get that done, or know if we can get it done, and having the insurance and the trust that we have, if it's a little bit outside the box or something that has to get done quickly, that you know you can get it done. We've been very successful on getting some outside of this box stuff completed recently. Tracy, the one that you just finished for Fleming, what was the idea behind that one? What was the
Fleming was the VA with a recent foreclosure, correct?
Yes.
Okay,
And it was over 1 year, but under 2 years.
Right, so it's a unique scenario here where you guys are able to kind of package that up and
Yes,
sell
because
it.
the standard waiting time for a VA loan after a foreclosure is typically 2 years. If you're able to present effective extenuating circumstances or a situation and a story that makes sense to the underwriter as to why the derogatory event happened, you can get exceptions for extenuating circumstances. It's actually very difficult to do, but we were successful in getting it done for this particular client, as we seem to be able to do with the majority of exceptions and extenuating circumstances, primarily because Caliber holds all of its servicing, so we don't have a third-party vendor that we're trying to sell a loan to and meet additional guidelines or overlays. So it makes our process easier,
Right.
and we're able to have make sense underwriting.
Yeah, and I think the biggest thing for us when we give a loan to you guys versus any other bank is that confidence of, if you say it's approved, unless that buyer goes out and gets a new car or loses their job, it's pretty much a done deal where at that point we have 100% confidence that we go find the right property, we write an offer within their guidelines. Once it's accepted, you guys handle the rest to an extent, and we know that we're going to get to closing, which is huge for us to feel that confidence, because we can also portray that with the client too, so they feel that much more confident in what we're doing. This is a big purchase for everyone, so when, especially first-time buyers or military, they haven't done this before, when we can show them too, like, hey, I can show you all the VA loans that we've done with Tracy and Robin recently, and you can call any of those buyers and borrowers, and they would be happy to tell you the kind of experience they had with our group and how everyone got to closing. And I think that's just huge, especially in this market where we have that confidence and the ability to make everything happen as smoothly as possible.
Yeah.
So as far as like your guys' background with Caliber, talk to us about what makes Caliber unique. I know most banks, let's just say a local credit union, they probably don't have the manpower internally to be able to turn things around as quickly. They don't focus necessarily on lending. They have other parts of their business. So what made Caliber the go-to for you guys?
I think the biggest thing is they want to do loans. They don't have these layers of kind of stopping, it has to get through this person and this person. Everybody kind of comes together and finds the way to get the deal done. There's always a right way to get it done. And I think they take the extra time to look at compensating factors and see how we can make it happen. So we can present different situations to them, and they're open to look at all of them. The experience behind Caliber is also nice. There's been people there that have been for a very long time, and so seeing a lot of things that have gone through helps too, instead of having new underwriters, new processors, things like that.
Sure.
So,
Basically, from cradle to grave, everybody has the same goal, which is close the loan, get the borrower the keys.
Right.
Nobody's battling, or you don't have the loan officer underwriter battles that used to happen and still happen probably at a lot of companies, but we just don't have that. Everybody's working together to achieve the goal, which is what can we do to get this closed.
Right.
Obviously, if it's a vanilla deal, nobody really has to think about it. But when there are some complications, which is getting
Most of the
very
time.
common in this market, it's nice to have everybody on the same page, sort of putting all their heads together to figure out how to make it happen.
I know you guys have a lot of unique products too, like one-year bank statement loans for self-employed people, or you mentioned recent foreclosure. So what are the biggest things you see happening in the market? You know, we're getting into higher price points now, so there's a lot more jumbo and higher price points. How are you guys staying competitive and helping buyers in this kind of market where maybe it's not a really traditional type of loan, where it's just a straight jumbo or conforming? Like, what are the things that you see happening a lot now?
They're coming out with some new programs. It's called our Elite products. And we're finding that debt ratios, you're able to go a little bit higher on the debt ratio. A couple products are going up to 55%, up to $3 million, as well as being able to do a loan up to 95% loan to value with no MI.
Okay.
And both the debt ratio, the reserves, everything's it's in line and very attainable. Sometimes you go to a bank and they want 36 months of reserves, they want 30% debt ratio or 28%, and it's not really doable. Here in San Diego, as our property values are going up, we're accommodating those. And then the 1 day out of bankruptcy is really helping foreclosure. 1 day out of bankruptcy, foreclosure, short sale, really can get those people back into a home if that was a circumstance that was out of their control.
Sure. And so let's talk rates. Let's talk 24 months ago, 3.25. People still have that kind of mindset. Rates are super low, which they are low historically, but they're starting to creep back up where if people want to make a decision, they do it sooner than later. Where do you think rates are going to be in the next 12 or 24 months?
Up.
Yep. How high do you think we might get?
Without a
In the
doubt.
fives, the mid fives, I think.
I think mid fives, maybe high fives in some cases. Portfolio products that are specific to a lender that you can only get at a Caliber. For example, our customized products, those are typically going to be maybe slightly higher just because we're holding 100% of the risk on those. There's no government agency backing them. But I think as a general rule of thumb, traditional, conventional, the Fannie Freddie, FHA, VA, we're probably going to be seeing in the low to mid fives on average.
So what kind of impact does that have going from 4.5 to 5.5 on a $500,000 loan?
It can affect a buyer's ability to qualify. One thing that we are seeing more of, especially with millennials, are non-occupant co-borrowers. The parents are stepping in either to help them qualify as a co-borrower or gifting them money to assist with the down payment.
So maybe they could
and
afford the
closing
payment,
costs.
and they might have roommates, but they can't qualify because they don't have enough income to justify. So
Correct.
parents are going to come in and show some income to help them out, or
Correct.
credit or whatever it might
and
be.
we have a lot of options for non-occupant co-borrowers, from the traditional government loans, conventional loans, all the way through to our custom portfolio products. So pretty much anything that we can offer, including jumbo loans under our portfolio, we can use non-occupant co-borrowers. We also have conventional products now that do go down to a 580 credit score. So some things are opening up in the market, making it a little bit easier from a credit perspective. We also do have some higher debt ratios, as Robin mentioned, but we are seeing, if somebody's qualified today at 4.5, if a week from now we're at 5.5, it could definitely impact their ability to qualify.
Their purchasing power.
Well, the same house is going to cost them $500 more.
Right.
I think is what, so if they know they're going to buy, they're going to get the same house they're looking at today for a little bit more.
Or the same payment and less house.
Exactly.
Yes.
Exactly. And it is important to kind of get with a lender up front just so we can work through some of these things. As putting offers in are moving quicker, 15-day close, 12-day close, which we get quite often.
Right.
It's good to have yourself dialed in up front. If there's a credit issue, we can take care of it up front, take care of anything that might hinder the process to get it closed. And even if everything is okay, but we have the ability to even maybe get their score up a little bit higher to put them in a better position, we can be doing that up front while they're looking.
Sure. The last thing I think most people aren't aware of, down payment assistance programs or these grants that you guys have coming out now. So 100% financing all the way up to $649,750, is that right?
Well, it depends. There's a couple different programs that you can do, and there's parameters with those: credit score, debt ratio, and loan amount. And there is most of them are the 453,100, and then we do have one that will go up to the 649,750.
So no money in your pocket, but you make a good living. You've got good credit. This could be an option if you make under about 150 household, right?
159,000 combined household income.
Okay.
Yes.
45% debt ratio, 640 FICO.
So the old days of needing 20%, not really true anymore, and it hasn't been for a long time. But I think that myth
Correct.
has been out there and still is that you need to have 20%, and that's definitely not
Well, and
the
even,
case.
even if you're coming in with your own down payment, your own funds, there's conventional options with as little as 3 and 5% down. FHA is 3.5% down, and then of course for our military and veterans, it's 100% financing up to the county loan limit. But veterans do have the ability to go up to $2.5 million.
Right. It's
on a
very
VA
little down
loan.
in comparison.
Correct.
Yeah.
I think the 100% program is great for the people that are paying rent in San Diego, where they're finding themselves at $2,500 and higher, and the only thing that's really stopping them is the down payment.
Right.
So,
Awesome.
Yeah.
Well, if anyone has questions, what's the best way for them to reach out to you guys?
Best number is to give us a call. Best way is to give us a call at 619-559-5902 or
909-559-0181.
Awesome. And you guys can always reach out to us if they have questions, and we can connect buyers with you guys as well. So thank you so much for coming on with us today, and hope we can get you some more business.
Thank you for having us.